Welcome to the Business
Video.
Blox podcast. I'm Chris Manser.
Hi, I'm Dale. Thanks for joining us again.
And how did you spend the long weekend, the Queen's birthday weekend, Dale?
We went out to a number of places, which I don't know whether it's a wise thing. So I wasn't sure if it's good to support the community or to stay at home, but we went to the casino, went to a couple of restaurants there, and then slipped up to the hot springs,
Oh,
which was
okay.
very nice.
So what was it like in
So
the
we
casino?
It was dead. So it was weird seeing it closed. All the machines were boarded up and all the tables were closed off. Most of the restaurants were closed. Only the expensive, sort of the more upper end ones were open, and they were sort of trying to make a few dollars. Limited numbers. We got served by the chefs, which I thought was interesting. So the head chef and the line chef all came out and brought us their dinners. There was just nothing really to do. They were like, it was sort of sad in a way that they were really keen to get back to work, but yeah, there was just no work. They just, getting there and putting out one or two dishes.
And do you think the customers are keen to get back as well? Was it booked out?
It wasn't a, yeah, it was. But when you're doing 20 people, it's very easy to book out. So,
Yeah.
uh, yeah, I think people are keen to get back out there and spend. I think people want to get back out there to support support the industries. It's hard to watch at times because like the headline chefs, which are they're used to just fast paced, just get it in, throw it out, just standing there on their phone, nothing to do. It's crazy.
Mm. They can't prepare, so there'd be no point preparing food, and you couldn't. Yeah, what can you do? It's nearly everything is made fresh. That's going to be
Yeah.
guaranteed.
So you got 60 covers in a night, which is probably what, maybe that's what they're on, maybe a little bit more. You would probably see them doing upwards of 200 to 300 normally. So it's just like ultra slow. The wait staff were all, can we help you? We don't know what to do. We don't want to stand around. We don't want to just linger, because that's what I'd say they've been drummed out of them. So yeah, it was interesting. It was a beautiful meal. I mean, the quality was there. The hotel was nice. Yeah, let's just hope things start to get back to normal soon.
Yeah, well, I think that's what the government's starting to do with. So over the weekend, we saw that they weren't taking a holiday. They've already looked to cut back on JobKeeper with regards to the childcare industry or the child centres.
Partially, yeah. That was an interesting out of nowhere cut. I think I watched the speech of the Prime Minister. I think it was on Friday, who he said, we promised JobKeeper up until the end of September. We are not going to cut JobKeeper. It's there till the end. And then 3 days later, they've cut JobKeeper for Childcare. They've introduced a different way of paying, so they're not totally removing all the subsidies. So what you get is 25% of the original fees of what you were earning previously. So if you were earning, say, 40,000 a week before all of this JobKeeper, all of this kicked off, you'll now get a $10,000 a week subsidy payment, as well as being able to charge, families again what they used to be charged. I think the interesting thing is the repeal of JobKeeper. So they made the decision that they say that we're going to remove JobKeeper and name it something else, which I didn't quite understand. I don't know why they wouldn't have gone through a more limited version of JobKeeper, but they're still supporting the industry by providing additional funding before they go back. So we still get that additional funding up until September, but we also get the ability to charge proper fees. So interesting. I think we're probably going to see that with a lot of other industries, that they're going to selectively remove from JobKeeper. I originally thought that because they had put JobKeeper into legislation that it was just going to be there, but now what they're going to do is change. It's always going to be there. So I would say that the retail sector and the restaurant sector, guessing, will receive JobKeeper for the full up till the end of September, but there are other industries that are receiving other forms of subsidy, much like the construction industry, may see a reduction in the JobKeeper that they're able to claim.
Okay, so like the childcare industry, you may see other industries be restricted, and you think construction may be one of them.
It makes sense. It's sort of a. I mean, that sort of makes sense in that here's your initial funds that are going to get you through the program. Now, as we start to stimulate the economy more specifically, this funding is going to replace the JobKeeper funding.
Yeah.
Maybe that's too logical. Maybe I'm sort of, reading too much in it. But if you base it on how they handled the childcare industry, childcare, it does get handled with kid gloves at times. So maybe it's just a childcare industry thing. But yeah, that theory rolled out, there will be changes to other industries.
Okay, and that ties into, the construction industry getting the boost with HomeBuilder. It is the $25,000 grant around new construction homes and renovations. Do you want to run through what's involved with that?
Yeah. So it's an additional money for pretty much everyone. There are income tests. I think it's $125,000 for individuals, $200 per family. So if you earn under those levels, you're eligible for the, what are we calling it now? The homemaker or home builder grant. So what that means is that if you spend $150,000 up to $750,000 on renovating your home or building a new property through a registered builder, then you'll get a $25,000 grant paid to you, but that building needs to be done before the end of the calendar year, so 31st of December.
Does it have to be built, or the contract needs to be signed?
Construction needs to be commenced within the first 3 months of the contract date. But you contracted, so you have to be contracted by them. So as long as you enter into a contract, you can get it in at the 31st of December, but then you've got another 3 months before you must start construction. And with the sort of, the slowdown over the Christmas period, it may be pretty tough if you sign a contract on the 31st of December and want to get something built 3 months later. Usually in the building industry, there's a longer lead time than that. You can't just sort of work into it. I'd say volume builders should be able to get the grant. And there's a few other conditions around the value of the home. Can't be worth than 1.5 million. Australian citizen. Yeah, I think that's about it. Very interesting though. Very interesting sort of a policy to go back to property. They were talking about it, and people were sort of discussing that the property was going to be on the agenda. But for them to actually pull the trigger and put money into a booming industry, I don't know if they see a lot more than what we see. I know I was looking at sort of mortgage stress rates and sort of other sort of indicators of what's going to happen in the industry. They seem to be ticking up, but they don't seem to be ticking up at high levels. There was a big boost in the number of houses that were under mortgage stress and the number of renters that were under rental stress in that first month of COVID. The May figures have just been released, and it doesn't seem that they've increased a lot from then. So it's sort of subsided since then. May have to do with JobKeeper and that initial shock, and people just sort of getting used to it. But there may be this may avert a sort of a big drop in the housing market, or it may keep it to a minimum level. I'm not quite sure on how big the uptake's going to be, because it is a very short time frame. So you've either got to have your land now and then organise a builder, or you're going to have to buy and go through a volume builder, which sort of seems to be the target of where this is going to go. I don't see a lot of people doing $150,000 worth of renovations on their home, so I don't quite understand that. And if you can afford to do $150,000 renovation on your home, are you really someone who should be getting a grant? It just seemed a bit weird. But it is what it is. It's money for construction. Do they see a longer term trend that they may be trying to plug? So what they're trying to plug is a hole that's coming in the next sort of 6 months. Yeah, I don't know. It's a weird one. I don't know if it's going to work, but it is more money for construction.
Well, because certainly a couple of things relating to the repairs, it can't be on your investment property.
No.
And it also, you can't be adding a pool, tennis court, or any of those external buildings. So who is sitting around waiting to do repairs unless they're knocking down or rebuilding completely from scratch?
It's pretty close, yeah.
Can you buy land now and build? That qualifies?
You can, but you have to build through a registered builder.
Okay.
So as long as you buy and then get a builder to do the construction, you can do it. But getting that settled in time is going to be an issue. So, if you've got a 2 to 3 month settlement on the property, you're already at the end of September. Then you've got to get the plans drawn up, you've got to get them approved, and you've got to get the building started. So it may just be trying to bring forward people who have just backed off a bit. But yeah, it's I don't know. I don't think it's going to have the effect of going where it needs to go. And I think the property market should have cooled a bit, but maybe I'm thinking it's cooled too much. They think it's cooled too much, and this is just a little bit of a Kickstarter to stop it crashing through the floor. But will they announce more money in this area? Probably.
Yeah. They'll see the
if history tells us anything. Yeah, I think we may see. There's been talk about changes to stamp duty, talk about changes to first home buyer grants. They may well play with it. We're not sure at the moment.
Okay. And then following on to other assets, also they've extended the instant asset write-off for businesses, the 150,000.
Yes. Big 150K. So any assets bought now until the end of, when did they extend it to? What did they extend it to?
Calendar year. So 31st December 2020.
You can write off anything that you bought for $150,000
relating to the business.
Correct. Yes. So it can't be a personal asset. I think the first person to do this was K-Rudd during the GFC. So they brought out 2010. That wasn't GFC. What was 2010?
Yeah, that was around that time.
Was that the
GFC? Yeah.
I know they did that substantial increase in the amount of depreciation that can be claimed. That was K-Rudd 2010 GFC. So they brought out then a doubling of so a 1.5 times allowable deduction for any depreciation. So you bought for $100,000, you claim $150,000. That was the first time that any government has started playing with depreciation rates and started trying to use that as a stimulus to grow the economy. 150,000 here is a very large. It's a very large amount. Covers most things. You still capped at depreciation limits on vehicles, so only up to 62 and a bit, less GST, comes up to about 57 something.
Yeah.
So you can only claim 57,000 on a vehicle. It's probably more aimed at things like trucks, large equipment, major upgrades that people need to do. It can't hurt. It does hit the budget a bit more, so the budget will take another hit. That does need to be clawed back. So, yeah.
At this stage, the budget's been thrown out the window anyways. No one reasonable person's going to expect you get anywhere near it.
Well, we are officially in recession.
Yeah.
It was announced. So we had a quarter of negative growth, being the March quarter. COVID came out just before the end of March. So I think it was the first week of March or something around there. So what that happened is that the GDP went backwards in March, and they know it's going to be worse in this quarter, which is the June quarter. So they got on the front foot and called it early, saying that we are officially in a recession. The interesting time will be, I would say, after the September quarter, when everything sort of kicks away, when JobKeeper disappears, what happens then? So the telling quarter is the December quarter.
Yeah. So to get out of recession, you need 2 quarters of positive growth?
I think just one growth,
Okay.
just growth, I think. Is it 2 quarters?
I don't know. We'll have to clarify that.
I know that the definition of a recession was 2 quarters of negative growth, so I would say 1 quarter is enough to get you out. There was some information around. I can't remember. That's all right. What were they talking about? No, I can't remember. It's lost me.
Okay.
But yeah, 150,000. Most assets. Oh, that's what it was. So they were saying that we've had an increase in our net imports, so net exports. So the amount of money that we were making as a country as opposed to what we were spending on exports has increased. So we are making more on our exports than we're spending, which people were saying that is a good indication of the economy recovering. But the main reason why that is because international purchases have significantly decreased. So the amount that the country is buying in either raw materials or finished goods to sell in this country or turn into finished products to sell to overseas has significantly increased, and we're still exporting a lot more than. So we're still exporting at about the same levels than before the GDP, which is quite interesting.
Yeah.
So, I think what we export and where we make our money from doesn't get affected a lot. So, it's food, it's coal, it's sort of steel. It's an area that I think gets affected with government policies. So as countries around the world tighten up things and choose to limit their spending through government policy, that might be a thing that comes out over time. But in the short term, we sort of haven't seen a huge hit to that.
Okay, good. And also, now we're in June, first week of June, starting to get towards the end of the financial year. Tax time coming up around the corner. I thought over the next, we got 4 weeks in June? Yeah, so over the next 4 episodes, we can just spend 5 minutes on any tax planning or anything that can be done tax related.
5 minutes. Yeah. So 5 minutes and we can cover it all off.
5 minutes every week, that's 20 minutes.
So I think that the thing that we should probably cover off is how tax planning works and the effectiveness of what you can do in a, let's say you started tax planning where people generally used to start, it was about 15th of May. So you would historically as an accounting firm sort of get everyone's figures in, knock out a final set of financials, and then look at what their profit situation is and then come up with strategies around minimizing tax. Should we spend more? Should we spend less? Do we invest? Do we take advantage of the 150,000? That sort of thing. It does get very difficult when you sort of try to condense that down to sort of 1.5 months. I know that we like to look at tax planning as a yearly thing. So every quarter we basically start reviewing, where you're at. You generally find that way you're not stung with either a huge tax bill or a huge bill of what you need to spend at the end of the year, which generally is the reason people have the most angst with their accountants. Because how many people have come up to their accountant in the last week or the last 2 weeks in the year, and he's gone, "Hey, you got a tax bill, and that tax bill is significant. Now you got to find the money to do it." And then we do the tax returns, and then we remind you again in sort of 6 to 8 months' time. Now you got to pay that tax bill. It's better that you tell people just throughout the year, just sort of a quick conversation saying, "Okay, At September, we're sort of tracking for here. At December, we're tracking for here. We've got to start to get serious. March, we got a big problem, and we're hitting for a big wall. Even with all this COVID stuff, even with people who have had significant decreases in their turnover and their revenue, it really didn't have a major effect on their sort of profit projections to a great extent. So you sort of go pummeling headlong into that wall, but just do it regularly, do it throughout the year. Just quick conversations around where your profit's at, what that means from a tax perspective. It's not hard to sort of eyeball it, and at eyeballing it gives you an indication of where things are at. I think more specific numbers does take a little bit more time, but you can get there with the software that people have got these days, with the direct access to information, with the live feeds. It shouldn't take people too long to sort of sit down and discuss, and then you go into a proper tax plan if you identify an issue, and then that's when you can go closer to the mark. We also have the issue that by 30 June this year, 30 June every year, for all discretionary trust, you've got to have your trust distribution finalised. So what that means is that you've got to work out where the profit needs to be distributed to before the financial year ends, and you've got to have a meeting and you've got to document that meeting. This is all in order to keep your tax distributions legal and relevant. If you don't do so, the tax office can turn around and disallow the distribution, leaving everything in the trust, taxing it at 48.5%. He has not tested it. Are they going to test it in the next year or two? Not likely with all that's going on, but it can be brought back to hit you. So if you've got a history of not doing it, it's probably something you need to turn around. That's probably two small things that you could sort of have a look at.
And the other one,
I think.
Well, the other main one is also super. If you're looking to pay super,
yes.
You can't do it after June 30.
Yeah.
So
25K. If you've got a lot of tax, pay everyone up to 25,000. You can usually do it as a salary sacrifice before the end of the year. Has to be put on the group certificates, all that sort of jazz. So they're the sort of moves you can make in the last few months. Not big moves. If I'm drawing a decent wage and I want to bring myself up to 25,000, you sort of maybe talking, 12 to sort of 12 to sort of 16,000 maximum that you can sort of do that way. And all the things that you do are only sort of around about that level. Nothing really significant can happen within a couple of weeks. So if we wanted to do a major investment in, say, business infrastructure, it's something that we've had to have planned for a long time. The rollout of a new internal system, if I want to go to a new online system, it's something I would have had to have planned for at least a month or two. So starting to talk about it at the end of May, although from some accountants' point of view, does give us enough time to make the payment to get everything set up, you just can't flow it through the business properly.
Yeah, mostly, if you're working on a cash basis, you could get the project paid off, but it's not going to be implemented before the end of the financial year.
Small moves, you can pay expenses off, you can do those little things, but long-term proper planning of businesses shouldn't be done in May. And then, okay, let's change our direction based on okay, we got to spend 30 grand. Let's take that. So I got to spend 30 grand in a month. If I had 2 months to plan where I could spend that, I could put that into proper projects. Yeah. Right now, what am I going to do? I'm going to buy a car, a forklift, something like that. It's not proper spending. It's spending for the sake of spending. Whereas plan your growth, match your growth to your income, you get a better result for everybody.
Yeah, exactly. Yeah, you always got to be aware that if you're spending money to save tax, you're actually only really saving 30% of what you're spending. So if you're wasting the money, you're just wasting the money for the sake of it.
Yeah, you're investing in future growth. That's what you're trying to do.
Yeah. Okay, well, let's see what the government has for us this week, and we'll chat again next week.
More money, more money.
Yeah, hopefully. Yeah, hopefully. Well, if the government is winding back some of the projects, some of the incentives, they're obviously hopeful that things are picking up, which is positive for everyone. And obviously, New Zealand is flying, no disease, no virus.
Yeah, they did very well.
So Australia can be next.
We are ahead of the curve, I know that. And there was talk by politicians to say that we should be seen as an investment destination because we are ahead of the curve. So, everyone can't park your money over here. Yeah, I don't know if that's going to be true. It'd be nice, but I think most governments will be speaking to their major corporations and saying, we need internal investment. We need you to look after home. You were saying, what were those figures you were talking about before? Was it with Spain's figures? Or something?
In relation to Europe, yeah. So Spain is looking at 20% unemployment with a negative 15% GDP currently.
Yeah.
They're expecting their bank is expecting recovery potentially by 2022 to be back to pre-COVID levels, and 2023 if it is on the slow side. That's on the slow side. They're expecting more waves and that type of thing. So, which isn't a bad recovery, 2 years. If that's what they can do, we expect the virus to go away. I'm pretty confident in that. It was a bit of overreaction. So
that's what I think. It hasn't hit like I thought, like everyone thought it was going to hit. The end of the world was announced, and then we just stayed home.
Yeah, it's this hyper world we live in with everything's driven by hyper news, and policies have been built around it. So we'll see. Always remember, this advice is general advice only. Seek advice from your tax accountant.
We are not professionals. Don't listen to us.
Yeah.
Actually, no, we are. We're
professionals, but seek us for custom advice based on your situation.
Yes. We are not financial advisors. We do not provide financial advice. Information should be tailored to specific circumstances. Can we just get that trailing at the bottom of the screen every 5 minutes?
Yeah, and I think we're starting to make it big because we are got our first dislike on our YouTube videos.
Oh.
So we've got the haters and the trolls, so we're starting to make an impact.
I think that was your bit. Mine's been pretty awesome.
Okay, I'll speak to you next week, Dar.
Thanks, mate. See ya.
See ya.